There are two stocks that the members of Congress have been buying this year. The question on our minds is, what do they know that we don't know? And what do these stocks have in common? Guys, one thing that these stocks have in common is they're at the forefront of semiconductor and chip manufacturing, and Congress is definitely in the know on those things. They have a combined $156 billion in free cash flow and have already spent $41 billion in research and development in the last 12 months, which is a 10 times increase from the previous decade. There is a race to semiconductor dominance going on with more at stake than the space race back in the 1950s. So let's analyze these companies and see who bought them. The first stock, Apple. 9 members of Congress bought Apple. Josh Gottheimer, Marjorie Taylor Greene, Morgan McGarvey, Laurel Lee, Kathy Manning, Pete Sessions, Jared Moskowitz, Tommy Tuberville, and Markwayne Mullin. Now, some of these congressional members have violated the Stock Act, which is the law that prohibits the use of non-public information for private profit, including insider trading by members of Congress and other government employees. In August of 2022, Representative Gottheimer was reported to have violated the Stock Act by failing to disclose a stock transaction involving Independent Bank Corp within the required time frame. In addition, he had been noted for aggressive trading in Microsoft shares, raising concerns about his potential conflicts of interest given his committee roles. It doesn't stop there. Representative Manning was reported to have been late in filing several dozen stock trades that could have been worth up to $1.25 million combined. Her office stated that the third-party professionals managed the investments and the error was promptly rectified upon discovery, which very well could be the case. But again, why do we even have to ask these questions? And it's not done. Representative Moskowitz made over 80 late disclosures of trades in companies like PepsiCo, T-Mobile, and Nike at various points in 2023 and 2024, not too long ago. A spokesperson for them attributed the delays to technical problems, and the required fine was paid. Can I ask a question? What the is a technical problem that would get somebody to not report very simple trades? Was your email not working? Was your typewriter not working? Was your hand not working where you couldn't scribble, here are the things we bought on the dates we bought them? Senator Tuberville should have properly disclosed nearly 130 separate stock and stock option trades worth at least $900,000 and as much as $3.6 million. And of course, a complaint was filed against him for these violations. So you know what's interesting, guys? The best investor of all time has been selling Apple, and what have members of Congress been doing? They've been buying Apple. Now, you sit here and we talk a lot about, should Congress be allowed to trade in and out of stocks? Guys, my personal opinion is, I don't know necessarily yet if there's insider trading going on, but to me, what I have to say is, why even have the question? Just ban them from trading any sort of stocks. Force them to own ETFs, or, hey, you guys are the ones responsible for government debt. Only buy government bills. But at the end of the day, when I look at Apple stock being the most purchased stock, I think to myself, they're no different than us. They just buy whatever is really exciting and going up in the big hype stock. Now remember, Apple deserves the credit they get. It's one of the best businesses the world has ever known. And with its current market cap, it'd be the 5th largest country in the world, only behind the US, China, Japan, and Germany. Imagine that, guys. In addition, Apple has seen their margins explode since 2014, going from 28.7% to 31.5% today. Now, you may sit there and hear that go, that's barely 3%. That is huge for a conglomerate like Apple. With how many fixed costs they have, that's a massive, massive increase. And a big reason for that is the rise of Apple services, which is a very high margin product and one of their fastest areas of growth. Since the first quarter in 2018, Apple services have gone from 9% of revenue to 26% of revenues today. And guys, as you see, it's not just because of some other area dropping. It's not like iPhone sales and iPad sales are down by 50%. Quite the opposite. Since 2007, Apple's worldwide smartphone market share has gone from 3% to 17%. But I got to think in the US, it's way higher than that. They have become totally ingrained in our lives. They currently have 2.2 billion active devices around the world and 3.84 million apps in its Apple App Store. which attracts 650 million weekly visits. Guys, think about that. The US population is 330 million. They attract 650 million weekly active visits. And it just came out last week that Apple is rumored to be buying Intel, which is in the process of a massive turnaround and a move to a foundry system that includes billions of government and subsidies. And this might explain why members of Congress have an interest in buying Apple. What do they know? Now, Apple's one of the biggest companies in the world, right? And it's hard for those companies to grow. But look at this amazing thing. These are what the analysts think about Apple's earnings per share over the next few years. 684 growing to 1138. Guys, that's double-digit growth every single year. For a company this large to be able to grow double digits on their earnings per share is incredible. Guys, they did over $100 billion in free cash flow in the last 12 months. And guys, look at the funny thing about their revenue. Not much revenue growth, but bigger than you think. Mid to high single digits. But you don't need, when you have high margins, especially with services growing so much, this can lead to major earnings per share growth. So the best is not done yet for Apple in all likelihood. Now, guys, you may have noticed that we have a waiting list at everythingmoney.com. Today's software includes everything we have to offer for retirement, stock analysis, and real estate. All of these tools right here that we made for me to use every single day. Now, behind the scenes, we have to make some changes. So this offer of everything is going away very soon. Now, if you remember from the very beginning of this channel, I built this software for myself and for my team so we could use it to continually make the right investments in stocks and real estate. In fact, in real estate, we've closed on a $22.5 million apartment building, a $7.5 million apartment building, and I've purchased 2 houses worth $4 million using this software. I log in and go into it just like you would. But as we grow, it's become less about me and more about how I can better serve you. And this is why we are updating our software to give you exactly what you need. Now, the good news is these changes haven't been made yet. So if you join today, you'll be grandfathered in for life with everything you see here. And this is the best deal we are ever going to offer. I'm telling you this now because there's still time for you to sign up. As long as you join our Everything Money community, before we make these changes, you'll be able to keep your plan even after the changes have been made. So click on the link in the description below to get access to everything we have to offer, including our investing tools and the community. And I'm very confident it'll be the best decision you've made all year. And a lot of people in our community talk a lot about the Pelosis and the congressional people of the world and what they may know. These are the conversations you need to have about this. And if it's not about them and you want to analyze Apple, this is why we have the Stock Analyzer tool. So guys, when it comes to Stock Analyzer, what we're trying to do here is figure out what is the right price for us. Because all the great stories about Apple, we can go on for days about these great stories. Apple's a phenomenal company. But you're here because you probably understand that it's possible to overpay for a good thing. And as great as Apple might be, there's still a price where at some point it just doesn't make sense. The hard part is, what's that price? Well, the Stock Analyzer tool can help give you a glimpse into that. It asks us to make low, middle, and high assumptions for our revenue growth. And we can do analysis up to 20 years. So in this one, I did a 10-year analysis. Look at this return on invested capital, guys. 10 years at 38%, 5 years 53%, 1 year 68%. You know what this screams? Moat. That's what this screams. And when a company has such a high return on invested capital and such a big moat, what does that mean? You got to pay a premium for it. Apple's a premium company. You have to pay that premium for them. Now for revenue growth, I was very conservative. 3, 5, and 7% revenue growth. I didn't go crazy because it's going to be harder for them to do 7% revenue growth than people think. Profit margin. I did 21, 24, and 27. And for free cash flow, I did 24, 26.5, and 29%. I went higher on free cash flow because their free cash flow is higher than their profit margin. So I want to give them that premium. Finally, for PE. Now, guys, this is the hard part. And people are going to disagree with me till I'm blue in the face. Some would argue that Apple's a 15 PE because it's too big. It can't possibly be blah, 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 blah. Understandable. Others would argue, no, this is a moat business. It's huge, high returns on capital. You got to give them a much higher PE. Don't disagree with that. It's very difficult to come with the right multiple to pay, but this is the important question to ask. That's why we have these ranges. And that's why this tool has been used to analyze over 1,600 companies in the last month. And this tool has been used almost 1 million times this year by our users for exactly that reason. You have to sit there and make your assumptions. So I put in 19, 22, and 26. Went a little bit higher on the high side. Now, finally, desired return. Guys, I don't think you should buy Apple for a 9% return. But I put that in here because that's the market return, 9 or 10%. So this is going to tell me, here's what Apple is worth, Paul, based on your assumptions. Then from there, I have to give a margin of safety. Because, guys, we're human and we're going to make mistakes, and we don't know the future. So you must have a margin of safety, just like the bridge builder who wants to get a 10,000-pound truck across the bridge. They built it ready for 20,000 pounds. No different. Make sure you have that. So based on no margin of safety, hit the Analyze button, and I have a low price of 108, high price of 221, middle price of 154. So guys, it seems a little expensive right now, but all you have to do is be patient. Add it to your watch list and get ready for it. Stock number 2, guys, Nvidia. I laugh at this. Just Nvidia, while we're recording this video, Nvidia became the number 1 market cap business, and that was 11 people in Congress buying it. Pete Sessions, Marjorie Taylor Greene, Nancy Pelosi. Guys, the most common question we get about Nancy Pelosi is, does she have inside information? Now, I will say this. I don't blame people for asking. She's in Silicon Valley. But before we get to them, Marjorie Taylor Greene has reported significant trading activity, including Apple and Nvidia. And while her trades have raised questions about potential conflicts of interest, there have been no formal allegations or reported violations of the Stock Act against her. And that's something to not be taken lightly. However, we still need to ask these questions. I think it's an important question to ask. Like, guys in Congress, what are you here to do? Why are you so active at trading? If you say it's somebody else doing it for you, that's not separate enough for me. I want to make sure that you're there to make the country better, not to make your pocketbooks bigger. You'll have plenty of opportunity later to make your pocketbooks bigger. But why are you doing this? But until then, until that changes, until they self-regulate themselves, spoiler alert, not very likely, Nvidia is a great, great company. It's the most remarkable stock today, and it's not by accident. A lot of people may believe, and at me at one point as well, I thought this, that Nvidia got lucky with the AI tailwind. That's not true. Remember, I also believe that luck is when preparation meets opportunity. Nvidia has great products. They have a record of profiting from the major industry trends since its founding. When they came on the scene in the early mid-90s, during the rapid growth of gaming chips, they were the leader in that. When I was a nerd in high school building computers, Nvidia was the gaming chip. There was no question about that, even back then as the company was 4 or 5 years old. Then, in the last 10 or 15 years, as Bitcoin had its major run-up, they were on the forefront of cryptocurrency. And they absolutely planted themselves as the largest beneficiary of the AI revolution on planet Earth, controlling 80% of that market. They are a proven operator with a great balance sheet, and they understand where the puck is heading. Since they went public, Nvidia's compounded at 33.38% annually, making it the highest return stock with a 20 to 25 year track record. And a lot of people believe the CHIPS Act is the only way to keep the U.S. semiconductor industry competitive on a world scale going through 2030. Guys, there is no denying the company of Nvidia is amazing. But whenever one company has such a massive rise in stock price, even with the growth this company's had, you still got to ask the question, is it too much? Look at the growth this company's had. Look at their income statement. Look at this revenue. 4.7, 5, 6.9, 9.7, 11.7, 11, 16.68, 27, 27, 61, and 96 billion in the last 12 months. Jesus, that is huge, guys. And guess what? Analysts, they think even more is coming. Revenue growth going to 250 billion by 2029. 250 billion. That'd be 4 times larger than last year and 2.5 times larger than the last 12 months. And where are their earnings going to go, according to analysts? From $1.27 to $5.83. That's over 4x. That's actually almost 5x. It's like 4.7 times more. That is huge for a company that just surpassed $3.5 trillion market cap. Now, is over a 35 to 1 price to sales ratio reasonable? It can be. If the company is going to grow at 30% a year for the next 20 years, pay that all day long, without a doubt. The question is this an example of too many people chasing a good thing? Because when everybody's chasing it, what's happening to the stock price? It's going up and up and up. And at some point, there's a disconnect from reality. I'm not trying to be a fudster here. I'm just trying to teach the process of understanding as the people in the community understand. We sit here and talk about, is it possible to overpay for a good thing? If the answer is yes, you've found the right channel. Everything has a price, and there is a price that's too high. If your price that's always too high is a price above today, then I want to teach. I want you to understand that there's a fundamental price that's right for a company. And guess what? That price should factor in the potential of the business as we have in our stock analyzer tool. Because guys, look at our stock analyzer tool for NVIDIA. Look at my assumptions for NVIDIA. I did 10, 20, and 30% revenue growth for the next 10 years. Guys, 30% revenue growth for 10 years. You know how much that is? That is 14 times their revenue. That's taking their revenue from $90 billion to what is that? $1.25 trillion. That's a huge number. Is it possible? Sure. Is it probable? And that's the question you have to ask. So that's why there's going to be a very wide range of prices here for this company. But you have to sit there and understand that. Profit margin. I did 30, 40, and 50% for both profit margin and free cash flow. Keep in mind, their free cash flow is about 50% right now, and their profit margin is 55%. But it's been driven a lot by the fact that they're the only ones in the market right now. Is that going to continue? Maybe. Maybe could continue. I would rather not make those assumptions. PE for the end of 10 years. I put 20, 25, and 30, and then my 9% return. I hit the analyze button, guys, and before I show you the prices, I want you to remember that these are the questions you need to be asking about companies. If you don't already think that way, go sign up for the community because these are the questions you have to be asking. These are the questions that thousands of people ask. I'd rather have you make reasonable assumptions than have your investment rely on the best possible outcomes. Because guys, look at Tesla as a prime example. Tesla, nobody thought Tesla would ever drop prices. They dropped prices 7 times in the last year to sell more cars. It's reality, it happens. So what are my values for NVIDIA? A low price of 36, high price of 385, middle price of 125. So guys, for me, it's a little too rich for me making these assumptions. And if you want to see more about what stocks Congress is buying, watch this next video on the 5 stocks Congress is buying today. Thank you for your time.